All right, let's dive into one of my favorite puzzles in all of economics. It's this beautiful, kind of mind-bending idea that actually won a Nobel Prize. And what it does is prove that something we always think is the goal, perfection, is not just hard to get in financial markets, it's literally impossible. And boom, here it is. This is the big question that economists Grossman and Stiglitz dropped on everyone. It sounds almost like a riddle, doesn't it? Think about it. If market prices already have all the information baked into them, why would you ever pay to go get that information, right? But if nobody pays for information, then how on earth do the prices reflect it in the first place? It's this perfect little circle that just seems to break your brain. And this one question, it goes right for the throat of the whole efficient market hypothesis. For the longest time, this efficient market idea was like the cornerstone of finance. The whole theory was that you just can't beat the market. Why? Because any juicy piece of info you might dig up, well, it's already priced in. It's a really neat, clean, beautiful idea. But, and this is a big but, Grossman and Stiglitz saw a huge, fatal crack in its foundation. So, to break this all down, they created this really simple model. They just imagined a market with only two kinds of people in it, and it's the dance between these two groups that makes everything tick. Okay, so on one side, you've got your informed traders. These are the pros, right? The hedge fund analysts, the serious researchers, they're spending real time and real money, what the model calls cost C, to get some kind of special knowledge, an edge. Then, on the other side, you have the uninformed. They're not paying a dime. Their whole strategy is to basically get a free ride by just watching the price and trying to figure out what the informed folks are up to. Okay, so here's where it gets really cool. How does this secret, expensive information that only a few people have, how does it actually leak out and become part of the public price that everyone sees? So let's play this out. Imagine one of our informed traders pays for a super secret weather report. It says a massive storm is coming that's going to destroy all the crops. What do? They immediately start dumping their shares in the local farming company. All that selling puts a ton of pressure on the price, and it starts to fall. Now, the uninformed traders, they don't have the fancy weather report, but they're not clueless. They see the price tanking, and they think, whoa, hold on, somebody knows something I don't. And just like that, the secret information, the coming storm, starts to get baked right into the price. And you really got to get this part, if that price drop was a perfectly clear signal, like if it screamed, a storm is coming, then the informed traders would have zero advantage. Why pay for the report if you can just wait for the price to tell you for free? So for this whole system to actually work, something needs to make things messy. And that something is what economists call noise. Think of it as just random activity in the market that has nothing to do with any secret information. Maybe a huge pension fund is rebalancing its portfolio, or some big company has to sell for weird legal reasons. This noise is absolutely essential. It's like a fog that rolls in and makes the signal blurry. Now, the uninformed can't be sure if the price dropped because of a secret storm or just, random noise. And it's that uncertainty, that fog, that protects the value of being informed. So you end up with this constant game of cat and mouse, right? The informed are trying to cash in on what they know, while the uninformed are squinting through the fog, trying to read the tea leaves of the price. And all this tension, it settles into a really fascinating kind of balance. So let's think about this for a second. What do you think happens when more and more people decide, hey, I'm going to pay up and become one of the informed? Well, at first, when there are only a handful of informed traders, their advantage is gigantic. I mean, they know something that basically nobody else knows. The amount of money they can make from that secret is way bigger than what they paid for it. So yeah, there's a massive incentive to get in on that. But as more people pile in and become informed, they're all trying to trade on the exact same secret. All of them acting at once makes the price snap into place super fast and super accurately. The market gets more efficient. The secret gets out almost instantly. And this is the beautiful, ironic heart of the paradox. The very act of using your information to make a profit destroys the profit potential of that information for everyone else. Your advantage just shrinks and shrinks. So the market settles somewhere in the middle. It's not perfectly efficient, but it's not totally random either. Grossman and Stiglitz had this amazing name for it, an equilibrium degree of disequilibrium. I love that. All it means is that there's just enough wiggle room, just enough inefficiency for the informed folks to make back the money they spent on research, but not enough extra profit to convince everybody to jump in. The system has to be, by its very nature, a little bit broken. All right, so we have this delicate balance. Now let's do what economists love to do. Let's push it. Let's take it to the absolute extreme and see what happens when we try to make this thing perfect. So here's the thought experiment. What if we could just get rid of all the noise? What if there was zero randomness? What if every little tick in the price was a perfectly clear, high-definition signal of what the insiders know? Well, you get this completely impossible, catastrophic loop. It's awesome. Follow me here. Step 1. If prices are perfect signals, then nobody pays for info, right? You just watch the ticker for free. Step 2. But wait, if nobody is paying for info, then there's no information going into the price. The price becomes meaningless, totally random. Step 3. Well, if the price is totally random, then there's a ginormous incentive to be the one and only person who pays for info. You'd make a killing. The whole system just collapses on itself. It can't exist. And that brings us right to the jaw-dropping punchline of their paper. As they put it, if information costs something, and if prices perfectly reveal that information, then a competitive market simply cannot exist. It's not just difficult, it's not just unlikely, it's a logical impossibility. So this isn't just some dusty academic theory. This has huge, real-world consequences for how we think about the markets we all participate in every day.
And look, the proof isn't just on paper. It's right there in the real world, and it's measured in trillions of dollars. Think about the entire global asset management industry. We're talking hedge funds, research analysts, all of them. They spend a staggering amount of money every single year trying to get an edge, trying to become informed. Their entire industry is basically one giant, multi-trillion-dollar bet that markets are not perfect. The fact that they even exist is all the proof you need that this paradox is real.
So what does this all mean for us? Well, here are the big takeaways. 1, prices are really, really good at reflecting information, but they can never, ever be perfect. 2, for the market to even exist, there has to be some kind of reward for digging up information. It has to be worth the cost. And maybe the weirdest one of all, number 3, that noise, that randomness that seems like a flaw, it isn't a bug. It's a feature. It's the grit in the oyster that allows the pearl to form. It's the necessary imperfection that keeps the whole machine running.
And that leaves us with one last kind of wild thought to chew on. This whole paradox proves that the chance to beat the market, well, it can never really go away. In fact, you could say the market needs people to try and beat it. It's that relentless hunt for an edge, for some secret piece of information, that ironically makes the market so incredibly efficient for the rest of us. The system needs the hunters, even though the more hunters there are, the harder it is for any one of them to catch anything.